So, yes, let's start from where we left yesterday. So I want us to read the question. What do that question in specific? Sure. Yes. So let's tune there and no smiling for the next 1 hour. Will you smile, you go out. Serious because and then so let's go to May 2014. Lakini tabia alikuwa nayo alikuwa anakaa. Tabia alikuwa nayo si anachukua siku anaweza kumsikia hivi ya siku ana hiyo. I use now that is what you do. May 2014. Question 3. Let's go to that handout. Actually, that's the last question I'm doing for branch. What can your branch? Itabidi uelewe sasa. Itabidi uelewe. Moshi Enterprises, I'm reading. Ukosho kuna hiyo karatasi kweli? Kuna karatasi kama 800. Were you there when I was giving this handout? I doubt. Let them give us more copies. Meanwhile, others can read it. So instead of waiting, no one let Tani. Nipatie hapo msomi na huyu ataleta. Yes. Yeah, nasoma na huyu. Nimepeana one photocopy, so when they bring. Yes, so they say Moshi Enterprises commenced business on 1st April 2013. The head office of the firm is in Nairobi, with the branch in Mombasa. The branch is managed by a salaried manager. Moshi Enterprises acquired job lots of plastic toys and packages them according to customer orders. The packaging is a feature of the firm's marketing strategy, and it costs 10% of the cost price of the toys. The toys are thereafter sold at a profit of 12% of the selling price. What is that? 12% of selling price. Is that markup or margin? Margin, yes, on selling prices. Margin. I'll share that. Packaging toys are sent to Mombasa branch at a selling price less at selling price less 6%. Less 6%. So be careful there. There's a very big issue that they are selling. The profit is 12%. They are selling at a profit of 12% of selling price. So that is margin. So please start by checking this formula. Selling price. Mwenye anaulizia handout group, please. Group. Selling price. How do we calculate selling price? Cost plus what? Profit. We said when you are given margin, what is set at 100%? Can someone repost the handout in the group for her? So when given margin, what is 100? Cost or selling price? Selling price. So this is 100 because the margin is what percentage? Well, meaning the cost is 88. Half this, you have started. So the cost of the goods is 88. When you are given margin, then selling margin goes hand in hand with selling price. So when given margin, selling price is the one which is 100. If it was markup, then cost is the 100. So the selling price is over 100. So how are they sending them to the branch? Can you check out they are sending them to the branch? How are they sending them to the branch? %6% less the selling price. So it means this is 90 what? 94, correct. Cost will remain constant. Cost will remain constant. So if I can collect information here, you say to branch 94%. So goods should get to the branch at 94. So then to head office, to the public. Public, they are selling at what percentage? 100. They are selling at 100. Selling price is at 100% because profit is 12, cost 88. So to public 100, to the branch 94. Then the cost of the goods is at what percentage? 88. Very important for that question. Very important. The 10% layer toys here, see issue. Profit we have analyzed. Let's go to where? The question. Down there, the following trial balance was extracted by the firm as at 31st March 2014. Capital is only the head office. Branch, avoid one capital, they are in Patakula. Fixtures in Nairobi, purchases of packaging materials, purchases of toys, sales, goods sent to the branch. Hapo iko shida. Goods sent to the branch. Head office sent how much to the branch? Kindly check. How much did the head office send to the branch? 1598. But of what was sent, branch only received how much? 1569, eh? Well, receive less. Less, eh? Mostly, though we will hear what is happening down there, mostly, when they receive less, it means there is goods in what? Transit. That is why you can have that variation. They have sent more, those people have received less. So if they don't communicate to us anything ahead, then the difference in the goods sent and goods received is assumed to be goods in transit. Sure. Then expenses, trade receivables, trade payables, head office current account, branch office current account, bank balance. Additional information. Packaged goods whose selling price to the public was 38 or 9 were dispatched by the head office to Mombasa branch on 28th March 2014 and were received on 5th April 2014. So can you work if that is the difference? Can you work it out? Check the difference whether it is that one which they are trying to say is in transit. 28? Na hii wanasema ni? Oh yeah, I know why. You know why? They are saying packaged goods who selling to the price to the public. Public selling price was what percentage? Senior 100. But if you're checking branch goods should land at what percentage? 94. So if you find your 30, your 30 is at 100. What about 94%? Have you tried to maneuver with that one? The 38 or 9 is to 100. What about 94? So 94 times that divided by 100. $94 times that one divided by 100, something close to that or that. Neo, it comes to 28. So 960. Yes, so that one. So that is what was causing the variation. Because you know why we are doing that? The 38 or 9 was at the public, but public is 100. Sure. Yes. So that is okay. Mombasa branch had sent cash amounting to 50,000 to the head office. The cash was not received. Cash in what? Transit. That is cash in transit. Next, an annual stock take on 31st March 2014 revealed the following. Toys which cost the head office 10 was considered what? Obsolete. Okay. Packaging materials at the head office which cost 5,000 was spoiled. The Mombasa branch stock take revealed a stock shortage of 13,000 being the invoice priced by the head office to the branch. Provision is to be made for a bonus to the Mombasa branch manager at 10% of the net profit after the bonus. Serious. Fixtures are to be depreciated at 20% on straight line. Required Moshi Enterprise head office, branch, and combined income statement. Moshi Enterprise head office, branch, and combined statement of financial position. Correct. I want us to start by doing this, by reconciling. Can you check for me current accounts? Are they the same? If your current accounts are not same, it means you must reconcile them to be the same. Are the current accounts same? Head office current account is how much? In the books of the branch. You know, head office current account is in the books of the branch. 21,040. Now, branch office current account in the books of the branch, head office, 360. There's a variation. You need to reconcile to ensure that they are in order. So let me start with that one, but that is not a big issue in branch. Big issue in Iko is stock valuation. Stock valuation. But let's start with the current account. So say in the books of the head office, so in the books of the head office, so in the books of the head office, in the books of the head office. In the books of head office, we have which account? Huh? Branch current account. We have branch current account. So you start with the balance brought down. We should be on the debit side. Sidideni. Wanadai branch walipe. Shillings are in what? 1,000. How many shillings? Oh, shillings. Now, shillings. So balance brought down. How much was the head office balance? The branch balance in the books of the head office? 300 and what? 60. So check the format I gave you, Jana. Check that format. What goes to the current, the branch current account after the balance brought down? Branch profit. Hey, Sarah, play your profit. Niweke hapo, tukishapata profit tutaleta, sio? We'll come back. So weka hapo branch. Na sasa tunajuaje kutengeneza profit? By God's grace, branch profit goes to the question mark. Then head office, we are sure there were goods which were in what? Goods in transit. Walikuwa wametuma hizo goods kwa branch, but branch hata hawajapokea. So unaondolea hiyo deni. So you told me it is 28. So it is 38 or 9 times 94 over 100. You said 28 times 60. How much? Like that. Yes. Then there was cash in transit. Those people have paid. Where do you want to letter? Cash in transit, how much? 50. So balance carried down. We can't get because profit is hanging. So until we prepare P&L is when we'll be able to get that one. So let's also come up with in the books of the branch, and this one can be required sometimes in exam. In the books of the branch, in the books of the branch, we have which account? Head office. Head office, current account. Head office, current account. So balance brought down. So to the branch, this is a liability. So balance brought down is how much? 20 what? Huh? 21. 281. 040. Then you will bring branch what? Branch profits. You top up, you will leave it. We don't have. Nothing will go to the debit side. Cash or the share tuma. Goods that they are not aware of the 2 months. So it will not affect. Jiangalie kama branch. Tuseme sasa wewe ndio branch manager wa uko Naivas Muli Avenue. Head office wametuma goods hazijafika ziko Mombasa Road. Unatoka kwa account yao? No. So you have not received the goods until maybe kama ulikuwa receive first. But goods haujaona. Then cash in transit when you send. So we adjust the books. So branch had already debited the account when they sent the cash. They credited the cash book or debited the office account. So they are the people who are supposed to adjust their books. So balance carried down. Balance carried down that way. So these figures should be the same. These two. This one, whatever you get here should be the same with this one. So leave them hanging. We will come back later. The main issue with branch is how to value stock valuation. Very subjective sometimes. But we don't have an option. It's ability to adopt. So right for me there, inventory, closing inventory valuation or Kupatyangi stock, you are the one to value on your own. So right there, closing inventory valuation. Closing inventory valuation. That is the main issue with branch. That one, that stock valuation is the main issue. So closing inventory valuation. So let me start with the head office. Head office, please recall that head office goods are recorded at what? Cost. So what we for suppliers, they get from suppliers, that is the cost. So in the head office, goods must be maintained at cost, and cost was 88% from what we saw there. So have this. These people, they will fail to give you the closing stock. This is how you calculate it. Use this formula. How do we normally calculate cost of sales? Opening stock plus what? Minus closing stock. So when you want the closing stock, can you make the closing stock the subject? Inside closing stock will be opening stock plus purchases minus. Is that okay? The formula goes up. Yes. So use this formula to determine the closing inventory. So let's start. Opening inventory. Opening inventory. Opening inventory. So opening inventory is when they have started. It's not there. So these people have just begun the business. So assuming it was there, that is how you start. So add purchases. Add purchases. Purchases. Yes, I can see purchases of packaging materials and purchases of toys. So add them. 400 plus 4 million. That is 4440. Then less goods sent to the branch. Less goods sent to branch. Whatever you're sending to the branch should reduce your stock. So Oh, it should be 440. Lakini it was up. The spirit and the so fine. Less goods which you send to the branch. This is what you had. What you sent to branch, you subtract, you buy your closing stock down there. So goods sent to the branch, they sent how much? Goods sent to branch 15. However, branch, remember, goods were not being sent at cost. Goods were being sent at cost plus profits. So no, which was 94. In the branch, goods were landing at 94%. So reduce this one to 88. So you say 1598 times 88 divided by 94. So that you get the head office you maintain at cost, not at profit. The goods which are being sent to the branch, it is you to know that goods don't go to the branch at cost. How much is that? 1496. That is the cost. Then, before I go to cost of sales, check the bullets. We have 3 bullets somewhere. Bullets are those dots. Toys which are the cost at office 10 were considered what? Obsolete. Less obsolete. We want the closing stock. Those obsolete are not good. 10. Packaging materials at the head office which cost 5 were done what? Spoiled. Less spoiled. How much? 5. The Mombasa branch stock take revealed a stock shortage on your branch. Wachana nayo. So the only thing you need to less is cost of what? Cost of sales. Less cost of sales. Less cost of sales. So cost of sales. Cost of sales. Were we given? Never. Where is it back here? They cannot give you. So you have to look for it. How do you get cost of sales when not given? This is what you do. What was the sales value to the head office? Head office sales was 2.8. So this 2.8, how are they selling? You know, sales is down to the public. They were selling at what profit percentage? 100. What about the cost? So the cost is what percentage? 88. So to get the cost of sales, use the sales value, in which case you take this, you multiply by 88, you divide by 100. Max. So not given the cost of sales, that is the formula. Use sales value. How much? How much is that? 24? Thousands. Correct. What you get now is the closing stock. Don't worry, we shall overcome. Unapata ngapi? For 65,000. So this is for 65,000. Fanya haraka aje. Wewe ni intimidating. Once a branch, 1, 2. Branch. Branch, we are going to maintain puts at what percentage? 94, correct. So in the branch stock valuation, 94%. So branch selling price, which is 94. So hapo goods tunaweka 94%. We start opening inventory here, one. They don't have nothing. Add purchases, add the purchases are purchases, also they don't have. They have, what they have is goods received from where? From head office. Can you check goods received from head office in the books of the branch? 15, 69. 40. Those are the goods they received, which is at 94. Then there was something which happened with the branch, shortages. So shortages. Yeah, the bullet 3. The Mombasa branch stock revealed a shortage of 13 being the invoice price. Invoice price is 94. Toa hiyo 13. Shortage. Kuna mtu labda alikula stock. Bali kama stock ni sweet. Unaweza cut na sweet bila kuona. Kula sweet kwa 13,000. Then less cost of sales. Less cost of sales. Cost of sales also use sales value. What was the sales value to the head office? Branch. 15. So it will be 15. Bring it to 94. Sales is to the public and public is 100. So bring it to 94%. So multiply by 94 over 100. 94 over 100. Hello? So so how much do you get when you work out this? Huh? 10,000. Subtract. How much is the closing stock in the branch? How much? 146. 040. Let's do combined. I'm afraid one day this thing is required. Student wanaiepanga kama ile ya accept terms and conditions. Kama kuna mtu anasomaka terms and conditions, tuna accept. So one day itakuwa required hiyo stock valuation. Students watakaki hiyo kitu. I agree, kuna marks mingi utapata hapo, utaona. But even after kuruka hii but one day wanaweka required. Let's go to combined. Combined means head office plus branch. Combined, mambo ya profit ilikuwa biashara yenu internally. Combined ilikuwa published. Ufai kusema hiyo ni internal affair. So combined at cost 88%. So combined, you bring head office closing inventory. We have gotten there 460 what? 5. The one which we have just calculated. Branch is at what percentage? The one we have gotten is at what percentage? 146, 0, 40, but which is at 94. What about cost, which is 88? This 146 is at 94. What about cost, which is 88? Is a percentage imekuwa 94 over 100, 100 over 88. It depends on what you are looking for. Branch ilikuwa 94. Combine hatutaki mambo ya profit ikiwa hapo ndani. We record that cost. So get for me that one. How much? Starting point 136. There were goods in transit. Goods in transit. Yeah? Ona, unajua why goods in transit is coming with the combined? Goods in transit inamaanisha nini? Zilishatoka huku na zijafika huku. Ziko hapo katikati. So to the business, it is part of the stock we have. Tukireport that tujazisema, zinaweza uzo huko na ipote. So you have to bring them to the combined. So goods in transit, it was 38 or 9, but 38 or 9 was at what percentage? 38 or 9 was at what percentage? 100. So it was at the invoice to the public. It was at 100. What about 88? So 88 over 100. Get the cost. Tumesoma haraka. Hii inachukua karibu 2 hours. Kama wenyewe wananisikiliza maswali ya hapo leo. Ndio. Leo tunataka maswali ya circumstances sio hapa. How much is that? 27? Give me the total combined. Unaweza kaa the whole day. Umekaa bila kufikiria sana. Umekaa tu the whole day. Hata ukipelekwa out mahali unaweza kaa out bila kufikiria kitabu. Unasikia tunashuka kuna kitu baya. Unaelewa story na unafikiria. Unafikiria wanaitwa kina nani? Kidole cha na tatu. Ndio direct kwa kichwa. Aya, total is how much? Kama hiyo stock valuation ya kufurahisha wewe pambana hapo katikati, but presentation utaona si baya, is not something very bad. The last thing I want us to check inaitwa unrealized profits. Very common in group in a branch. Can you check the notes? Soma hiyo notes tulifanya jana. There's somewhere we wrote the concept of unrealized profit. How does it come up? Can you put it on? Cash is in for goods. A book summary of unrealized profit, what we say?
Arises from the goods that have been sent to the branch, remain unsold at the end of the reporting period, or goods that have been sold at a profit to the branch but still in transit by the end of the
Correct, correct. When goods which were sold to the branch remain unsold. You know when you sell, you expect profit. Sasa unajua branch ni mtoto wa head office. Wale wauzia branch pia wanauza hizo goods. So it means the profit head office was expecting from branch inaitwa nini? Unrealized what? Profit. There were goods which were in transit. They sent branch hawajapokea. It means they have not done what? Realized. So when you want to know the unrealized profit, check the goods in the branch at profit. So branch at profit is 140 what? 6. At cost, it is 130 what? 6. Goods in transit at cost is 27,112. At profit ilikuwa 28,960. Sindio? So hiyo tulifanyia hapo. I don't know. So kuja hapa. Niandike hapo unrealized profit. Unrealized profit. Unrealized profit. Once you are done with that, we go to presentation. So unrealized profit from an 1 in the closing inventory. In the closing inventory branch. So goods in the branch at profit which is 94%. What is the closing stock in the branch at 94? 146, 040. At cost is 88. You're here. Check out 130 what? 6, 7, 18. The difference is the profit. The difference is the profit, which is how much? Wait, how much? Yeah? 93? One, two. In the goods in what? In the goods in transit. The goods in transit at profit, goods in transit at profit. Profit means 94. It was 38 or 9 times 94 by 100. This one gave us 28.96. No.
Yes.
At cost is 88%. Cost 27. 112. Subtract. How much? Where? How much? 1840. Therefore, down there, total unrealized profit. Total unrealized profit. Add the two. Add these two. How much? 11. Add those two. 11,170. 11,170. Tumemaliza. We can go to presentation. So let's check required. Let's check required. So the required Requirement 1, what do they want us to do? Income statement, which is profit account. So kama unaona valuation na kulemea unakuja kwa direct. Ati hapo uweze kosa max. Wacha tuone. So right there. Moshi, unajita Moshi. Enterprises. Statement of profits or loss for the year ended when? $2014. So they want you to prepare how many P&Ls? 3. For the head office, for the branch, and combined. So let's do them in one account. Head office, shillings, branch, shillings, combined. Also in shillings. Haya, pass. Tuanze. Profit account starts with what? Sales. So we start with sales. So sales. How much was sales to the head office? 2.8. Branch 1.5. Combine, add the 2. 4.3. So you be okay about Subada ya Diki ni Faraja. Sasa tuko Faraja. 4.3. Goods sent to branch. In the eyes of the head office, that is a sale to them. In their eyes. Wakituma goods branch, ni kama wauzia. So goods sent to branch. In the books of the head office here, we sell 1598. 1598. And you go over branch, and you don't take it to combine. Whatever you sell internally, that is not a sale. You don't take it to the consolidated, which goes to the public. So that is your own network transfer pricing. You don't take it to the combined. So it will cancel. In the books of the branch, we consider it as a purchase. So add that one. Call it total sales. Call it total sales, then you can call it A. So this is total sales. Total sales. So that is 1.5. So this is 1.5. This is 4.3. This is, how much is the head office? 43. 98. Then less cost of sales. Cost of sales. Take opening inventory. So opening inventory. Why should I disturb myself? What are you asking for purchases? You don't deal with things which are not there. Purchases. I remember this was 4440. Sure. And here there was nothing. And here 4440. The purchases. Then goods from head office. Goods from head office is a purchase to the branch it quotes. Sure. Si branch wakipokea goods kutoka head office ni kama purchases. Goods zikiingia kwenye na loans ni purchases. How much? Read for me how much they received. 15 what? Huh? 040. But after you purchase kutoka wapi? One of your one. You don't take it to the combined. It is a sale and a purchase in a cancel. When the back in a realized. The back in a goods in transit happen. So purchases, goods from head office. Then there was some obsolete stock. There was spoiled. There were shortages. So obsolete was 10. 10 in the head office. Eh? So in the head office, this was 10. Spoiled were also in the head office, it was 5. Shortages were in the branch. Shortages were in the branch, it was 13. But now, listen to this. You cannot take to the combined 13. Because 13, your 13, what they have said. Your 13, what have they said concerning 13? Selling price. Eh? Your selling price means at 94. So this 13 were at 94. What about, what percentage? 88. Combined must be 88. So reduce that 13 to 88%. How much? 12 something? 12 for 70. 12 for 70. Can you get for me goods available for sale? So add those items. These ones. Sumuken and sales. Add this one. Then we subtract closing stock.
Now, in Kenya, you want to make a decision.
How much across? The first one. Proceed. Finish. Closing invention. Subtract. So closing inventory ndio ile tulikuwa tunatafuta pale. Tell me those figures. You have them. You have them. The closing stocks which we calculated. Yeah? 260. 465. Branch. Combine. So take the figures you have gotten, subtract this closing stock so that you can get cost of sales. Online, kwani imekaa kuna swali. I'm operating without questions. How much is this? So this is the cost. Right? Read. That's 9. 43, 49. I call it Y. So gross profit is A. Call this one B. When Y is in A minus B. So take the A minus the B. The combined should be. Thou shalt not die well. 37,000. So take A minus B to get the gross profits. A minus B to get the gross profits. Even the branch in Aqua, hakuna style. Nichagua president na wanaolea branch what is it? Ask. How much? How much? How much? 438. Uh-huh. Uh-huh. All right, let's expenses. So let's bring expenses. Expenses, the one which I normally forget, let me start with it. Unrealized profit. Unrealized profit, we got how much? And unrealized profit is only the books of the head office. Now, total unrealized profit, we got 11. Head office ndio waliuza walikuwa na expect kupata hiyo lakini mkutana kuna kitu kupata. So don't take it to combine, that was internal affair. Go back now to trial balance. Try to check if there is any expense which you can see with your own eyes. Trial balance kwanza. Trial balance kuna kitu umeita tu expenses. Are you seeing it? Pia naenda tu. Watu wakutania mbele. 440. Depreciation. There was depreciation, the last note. They are depreciating at what rate? 20% of fixtures. Can you check the value of fixtures? At least in the corner of the combined at the corner. 160. What is 20% of 160? 32. And it was only the head office. Correct. Can you get for me now? Hebu soma hiyo mambo ya bonus. Cynthia umezima. Umezimia wapi? You have been introduced to copy. Hebu soma hiyo story ya bonus. What did they say about bonus? How are we supposed to calculate bonus? Expenses estimation. Net profit after bonus. Where is the bonus itself? So give me the net profit before bonus. Subtract, take the gross minus all those expenses. What you get is net profit. Net profit before what? Bonus. Can you get for me in each case? Get it in each case. Hey, net profit before bonus. How much? 50. Negative? 51. Now, who will get it? Huh?
50,000.
Katikati? Kuna kitu bado cha capture. Sijazoea hizo figures. There's an expense you have not captured. Which one is this? I will shop around to your balance. Is there an expense you have omitted? Any? Oh yes, ziko. Kuna expense za kuchukua. Unajua ni gani? Unaona hizo tatu. The obsolete, spoiled, and shortages. You know, it's an expense on your side. Here we just subtracted them to get the stock which remained in the store. But kama kuna shortage, goods zimeharibika. Sio ulikuwa umenunua, zimeharibika. It is an expense on your side. So expense those three: obsolete stock, spoiled, and shortages. Those three. Correct. Sorry for that. Obsolete stock. How much? 10. It was in the head office. 10. Spoiled goods. Spoiled stock. 5. 5. Shortages. Shortages was in the branch. 13. 13. When reduced, it came to 12 and 7. I get for me new whatever. New profits. So this is the net profit before bonus. I do calculate the net profit before bonus. Net profit before bonus. Just make that adjustment. Beatrice, so they appear twice. See twice, those things are different. Totally different. If you look at cost of sales to get the closing stock, after angalia in face value, in terms of the double entry, just check normally at where ulinunua stock, ukazeweka hapo zikaribika. So two things, if you want to get the closing stock, take what you purchased minus the ones which were spoiled. Then the spoiled again, you will come and expense them because an expense on your side, you have incurred a loss. So the first one is to get the closing stock. You subtract them. Then the other side now to expense them out of profit. So Beatrice, I hope umeelewa. Beatrice, I hope that is clear. The first is to remove them to get the net profit. So you should be getting net profit before bonus. How much, and how much? Figures. The first one. This is not making sense. What? Okay, what do you get? You didn't make sense. And this one here? Positive.
Yeah.
And combine? 16? 830. To leave a bonus, they say, so less bonus. Bonus was being paid where? in the branch. That's what they say. Mombasa branch. Other way to bonus, what was the negative? People can get a lot, then you pay them bonus. So what was the policy? 10% net profit after bonus. Alafu mwingine anaraba ati kizungu ni baya, unafai kwa before. This after. So hapo kuna kizungu. So you will get net profit after bonus. Net profit after bonus. Net profit after bonus. Of course, this will remain to be 2170. Hata hiyo balance sheet tufanye sasa hivi. Tukimaliza hii na to confirm current account na the profits, ndio hiyo tutafanya next time. Then they say that bonus is 10% of this one. So after. So it's simple. Your final profit should always be what percentage? 100. Hata sasa ukipata 2 shillings, so that is your 100% profit. So the final profit here should be 100. So if bonus is 10% of this, then it means the net profit before is at 100 and what? 10. You will 10% to back in 100. So you do this, you say 37 is equal to 110. What about 10%? So before unaweka huko juu, wangesema 5, unasema 105. Okay. You are getting 3364. 3364. Bring it here. 3364. 3364. Can you subtract so that we get profit after bonus? Kwani ukiacha inakuja ngapi? Bana, bonus iko tu kwa branch peke yake. So nothing plus this is this. You have reached point of diminishing return. Why don't they get this for combine? Now combining now this plus this. Jamaa naona unafanya calculator mara mingi. Unafanya kwa vitu hakuna. Haya, so profit after will be baji mtashika tu, si mbaya. Wala hata wamechoka naye. How much is the branch? 30. Akim na 37 minus this. 33. And this one? Sasa hapa ndio msema ukweli na kuja. When branch makes a profit or loss, that profit must be taken to the head office. Usiachie branch profit watakula. So any profit, any loss, transfer to head office. And any moment you transfer this profit to head office, inafaa balance na combine. If you balance, you are wrong. So go weka huku before the transfer. Take this one here. Add it here, whether you will get this. That is the confirmation point. That is the confirmation point. Will it balance? Yes, that is it. So we are very accurate. Branch profit 33,636, 33,636. Eliminate it here, so that retained earnings, profit which is remaining. Here there will be nil 13,466. The same. 13,466. Measure. Inaonekana rahisi. Inawekwa neat as if it is easy. Sisi kama unadhani kama umetoka na hiyo hesabu. Na inaweza kuja kwa mtihani wa kweli. The last time the exam branch was 2019. Lakini tuseme ukweli. Kwa hii pia ndani tunaweza pata vitu zingine. Apart from the stock valuation which was very difficult. Haya, do for me this favor. Mkimaliza hiyo tunamaliza. Branch made a profit of how much? 33,636. Can you take it to the current account? Nakumbuka zile current accounts we left hanging. Can you take them there, then ukibalance the current account, they should be the same. That's another checkpoint. If you take this figure to the current accounts, where we had left the question marks, it should balance. Ama niziandike hapa tena. Branch current account. What was the balance brought down? 360. Goods in transit, ilikuwa 28,960. Cash in transit was 50. Branch profit is what we are waiting. No. 33,636. And when you carry down, then the same profit, you take it to head office current account, which should balance. Kwani umeanza tena na tulikuwa tushafanya nini kipi? Tulikuwa tumeshaanza zikina. Sio hivi hapa. Umeanza fresh. Hizi tuko nazo, we have them. Just go back and fix for me what was remaining in this one. Can you fix them in the two? It is balancing. And if yes, by how much, how much? Cynthia, chukua tu profit weke kwa zile vitu zibaki hanging. Huyu unaona na watu wanaandika kwa additional. With 314. I'm told it is okay. With what value? 314, 676. This account tulikuwa tumefanya in case mtu aliingia late, tulikuwa tushazifanya. Just go back and Okay, head office current account, ilikuwa inaenda aje? Brought down was? Brought down was? So 281,040. Then branch profit is 33,636. When you have this and this, are you getting 340? 314,676. Then it means our profit is very accurate. Otherwise, I get it. Because our. Can we meet next to find the balance sheet? Yes. But promise, okay, I know branch in Agonga very subjective. But hapa unaweza toka bure. Fanya hivi kwa mtihani. Unaenda stock valuation. Do it on the assumption that umeulizwa kwa mtihani. The one stock valuation. Yenye hujaiuliza. Kama hujauliza usiende hapo kuumia peke yako. Kuja hapa direct. Because when you come here, once kuna vitu mingi sana utapata. So you will get this one, 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 this one. Hata unaweza wacheza zingine. Hii stock tu ndio unaona. Pale hii. Pale ndo watu zote unapeleka wapi? Natosha. So ni hiyo stock ndio inakuanga na issue. Otherwise the rest are just okay. So we'll do the balance sheet part of it in our next class. Thank you. So online, allow me to end the class because I was recording. If I don't end it, record until tomorrow. And it is not tough.